Hello everyone, Dividend Enjoyer here, and today I'm going to do a different type of video. We're going to be looking at Expedia versus Booking.com. This idea was suggested by my subscriber, Joey25675. He said, can you make a video comparing Expedia versus Booking and tell us which one you would choose and why? Thank you, Joey, for the comment. I really appreciate it. If you guys have any videos you guys would like me to make, please leave a comment down on this video and I'll get to it. Expedia Group, or ticker symbol EXPE, operates as a hybrid model, using both merchant and agency models for booking travel services. The merchant model of Expedia collects payments upfront and then pays the hotel or airline later. The agency model for Expedia acts as a middleman, and the hotel or airline collects the payment directly. Expedia sells ad space to hotels and airlines. This obviously makes sense because it's very synergistic. It would make sense that a website that's selling as kind of a middleman for these products and services would advertise these same products and services to consumers that are there specifically to get, again, this product or service, right? So they're able to probably charge a higher ad rate than other sites just because people are there specifically for that thing. So for hotels, they can sell the ad space for more than what hotels would pay on other websites. And it just makes more sense for both because they both mutually gain benefits from this arrangement. Expedia's key brands and services include Expedia.com, Hotels.com, Vrbo, Orbitz, Travelocity, Hotwire, and Cheap Tickets, Agencia, Expedia Partner Solutions. They're mainly focused in the US. Around 65% of their revenue is in the United States. They do have a growing international footprint, but it's weaker than Booking. If we take a second to look at Expedia's stock, it's up a whopping 49.63% in the past year. Current market cap is $25.97 billion. Price to earnings ratio of Expedia is 22.62, and the annual dividend yield is 0.79%. It has a 52-week low of $107.25 and a 52-week high of $207.73. Analysts mostly rate this stock as a hold, with the average analyst price target being $210.21, the low analyst price target being $163, and the high analyst price target being $290. I think that this stock has run pretty considerably, and it probably is the more expensive option of the two comparing them, but we're going to go over Booking now and see kind of what their business model is and how they're differentiated and how their stock performance has gone, and then we're going to do a DCF of each to see which one is the better actual value. Booking Holdings' business model primarily operates on the agency model, meaning it facilitates bookings but doesn't handle payments directly. In most cases, hotels handle them. This allows Booking to have higher margins and lower risk than Expedia's merchant model. Their key brands and services include Booking.com, Priceline, Agoda, Kayak, OpenTable, rentalcars.com, and their geographic focus is mainly on Europe, or Booking.com is widely used across Europe. They do have an Asian presence thanks to Agoda. They have a smaller US presence compared to Expedia. So this company still has a lot of growth in the United States compared to Expedia, but they are the premier site for most of Europe and Asia for this type of service. Looking at the stock is up 35.72% in the past year. Current market cap is $166.95 billion. The price to earnings ratio is higher than Expedia at 34.23, and the annual dividend yield is 0.69%. The 52-week low of the stock is $3,180.01, and the 52-week high for the stock is $5,337.24. The average analyst rating for Booking Holdings is a buy, with some rating it a strong buy and some rating it a hold. You have in total 13 rating it a hold, 20 rating it a buy, and 6 rating it a strong buy. The analyst price targets range anywhere from $3,996.33 to $6,300 as the high. The average analyst price target is $5,307.15. So Booking is actually beating Expedia in terms of the analyst ratings, but once we break down the individual DCF for each, I think we're going to get a better picture on which one would be the actual better buy. One really interesting thing about both of these companies is that when I was modeling for them, they have very similar weighted average costs of capital, even though their debt and equity structures are slightly different. This is Booking's model, and they are only 8.13% debt weighted, and their weighted average cost of capital is 7.75%. And if we switch over to Expedia, we can see that they're about 20% total debt weighting with 20.03%, and their weighted average cost of capital is about 7.79%. However, if we go over to the actual model, we can see that their average revenue growth is 17.46, and we compare that with Booking, we can see that their average revenue growth is significantly better at 37.53%. They also have an average free cash flow growth rate of 383%, but I think that this is just an extreme outlier from 2020 to 2021, where the free cash flow basically went from negative to positive. I'm guessing they invested a significant amount of money here, but the revenue also extremely went up, and this was a COVID year, so this type of business is going to be hurt whenever there's an extreme event that causes less travel, whether that's a recession or a global pandemic. But overall, just looking at Booking compared to Expedia, you can see that it's more consistently growing, and it just seems more quality overall, so it kind of makes sense that analysts were more bullish on this stock because it has a larger market cap, so there are significant advantages with that, and the price to earnings ratio is higher, but expectations are also pretty significantly higher. Here I wanted to show you guys, I have a growth rate of 13% here, and that has Booking essentially breaking even right now, but a 13% growth rate of the free cash flow is probably reasonable over the next 9 years when you consider that the average revenue growth rate is 37.53%. And when we switch back to Expedia, we can see that the average revenue growth rate is about 17%, and the free cash flow growth rate you're going to need is 8%, but their average free cash flow growth rate is actually negative. So I'm guessing that they still need pretty significant amount of CapEx or some kind of spending to make the business model better, because the market cap is much smaller, and it seems like it may be harder for this company to grow in the long term when you compare it to Booking, just because Booking seems like a very stronger company. I'm going to say this. I don't think I would invest personally in either of these, but I think that if you have a long-term horizon on both of these stocks, I really think that Booking just blows Expedia out of the water just because of the fact that you're getting so much more quality for what you're paying for, but you are going to be paying a higher price for that quality. And we can see that in the price to earnings ratio here of 34.23. And if we switch back over to Expedia, we can see that the price to earnings ratio is much lower at 22.62. You are also getting a little bit of a higher dividend yield. The stock again is much higher debt weighted, which I personally don't like, and the growth is much lower of the revenue and of the free cash flow just in general. So I think that Expedia probably would not be the one that I would pick. I think that Booking Holdings would win out just because I think that it's the higher quality company and that it's more realistic that they're going to have consistent growth into the future. And I think that there are a lot of advantages when you're the winner in a specific niche like this, and it does seem that this stock is the winner in this specific kind of middleman niche of travel bookings and things like that. And I think that they're going to be able to benefit greater from selling ads because of AI than Expedia, just because they're going to have more money to invest into getting the infrastructure up or getting the technology that they need. And I think that more people are probably going to just be using Booking Holdings because, again, they have that higher market cap, and it just seems like the safer bet out of the two. And as an investor, I want to go with a company that's stronger rather than the company that's weaker. And I think that you are paying a little bit of a premium for this company. I would not personally invest in either, just because it's not something that I think I want to add. I just don't want to add this sector into my portfolio because I feel differently about the sector as a whole. I think there are some downsides here, but I think if you had to pick between the two, I would pick Booking Holdings. Now, this is not financial advice, and I'm not a financial advisor, but I just want to say a big thank you to Joey for recommending this video. I really appreciated this type of video, and I think if it does well, I'm going to continue to do stock analysis videos where it's one company versus another that's in a similar sector and kind of give my opinion on why I would pick one stock over the other. So Booking Holdings wins the first type of stock versus video. Let me know which stocks you guys want to see go against each other in another video. Let me know what you thought of this video. Thank you guys for watching for this long. Bye.